What's up, everybody? Dave Bartosiak, and I have another chart of the day. This time we're talking about Hims and Hers Health. Ticker Hims. Now, there has been some volatility, to say the least, in this stock. And what's the latest round is Novo Nordisk said, you guys can't have Wegovy. So that is a drug that's part of their subscription, and they're mad. They threw some shade, to be honest with you, Hims way, saying that they didn't like their deceptive, marketing tactics, blah, blah, blah. So there's a little bit of shade being thrown. All you got to know is that the stock's under pressure. So I want to draw this fib here from the April lows to the recent highs. See that gap down. And one thing that I noticed is that we really haven't gotten to this 61.8. However, at least during the regular trading day last night, shortly after the close, we did drift down there. So, and that was subsequently bought. Now, I was fully expecting, here we are on Tuesday, June 24th. I was fully expecting to see a retest of these lows. Now, it's still intraday, so we'll see what happens. And by the time this comes out, maybe it already happened, but I was fully expecting a retest of that 40.60. So far, we got a little bit of a bid along with the rest of the broad market. Obviously, the big gap down, that's something that tends to get filled over time. So if it does start to trickle up, that should get tested, because this precipitous drop is typically followed by a little bit of a bounce. But important to note, even with that precipitous drop, we're still not even oversold on the RSI, which is pretty astounding. And I think that just points to how volatile this stock has been. And it's had several times where it's experienced some really sharp pullbacks. I mean, most notably, look at this. The February high of 72.98. You blink your eye, and in early April, you're down in 23.97. That's crazy, right? Ton of volatility in this name. And this really felt like a bit of a blow off top here, right? You get these days of just this huge spike up, parabolic spike up, and then it comes back in. But if you're looking, that overall trend has still remained positive. The 200-day moving average is still your friend. Stock is still above that level, but we did dip under this 50-day. And the last time you had a dip under the 50-day, you did move to that 200 before you found support. And it happened again here in August of last year. You dip under and then you move to the 200-day to get some support. So something to keep in mind. Now, should we get a little bit of a rally here, that 50-day now sits up at 47.78. So you could totally foresee a situation where we trickle up a little higher. And then this is where you got to worry about. So the more patient traders out there's a couple of things that you can do. You can wait to see a break of this on decent volume and go ahead and jump on in and go long and strong to the upside. You can wait to see if it gets over there and then fails, and then you can re-enter a short with a target at these lows here, or even better, honestly, I think the 200-day. But granted, these are longer term time frames for people, right? In today's world, we're so worried about just this open, close, high, low. We get a little bit dialed in there. But, I threw that fib up with very little explanation, right? Let's look at some of these previous moves, right? So look at this move off of the September low, and let's zoom in a little bit here. And so I drew this just pretending that, you're in a time capsule and you just wake up this day, right? And what happens? So you do get a retracement that dipped just under that 61.8 intraday, found a bid. I also had the confluence of support here with that 50-day moving average, and then went higher. Okay, took out those targets, took out the high and higher. And then we can redraw this again. This is what happens, right? You just end up moving it. We see another spike up there, and then you can draw it from this point. Say, okay, well, where are my levels there? And again, you get this sort of intraday action just below 61.8 before it goes higher, right? So these 61.8s come into play again and again and again on this Hims chart. And what happened the last move, they didn't hold, okay? They didn't hold, and they retested those lows. So you get a little failure here, although it tried, failed, lower. So this is kind of what I was talking about when I said, watch what happens at the 50-day again. And we're also going to get this confluence of resistance again. See, that 50-day is going to end up there, we're assuming now that we get a little bit of a rally, right? We get a little bit of a rally. You're going to have the 50-day and you're going to have the 50% retracement level at that same point. That's going to be a lot to get through. Okay. So I think the more patient investors and traders, go ahead and put a alert on your screener for 48.60 change, 48.50. Really, if it gets to 48, is when you should start looking and see if that setup ends up coming to fruition. I don't like, if I'm a bull, obviously nobody likes it falling off a cliff. Okay. You didn't need me to have a video to tell you that. But what I don't like is we didn't quite get to the highs. You had a failure to poke on through there. It looked like we were marching up before the news broke. Now, has this changed the outlook of the stock? A lot of people think it has. And you have seen some analysts come out and say, you know what, we're going to downgrade this thing from buy to hold to sell, that kind of thing. Usually when you have this sort of dramatic action, you're at least going to get to that 200 day. Okay. So all of this in between here, in between that 50 and the 200 can be very noisy. So be careful. I think if you're a little bit more patient, you just wait to see if it gets to that 200 or wait for that 50% level over there before you start getting in on the action, because before then you could just get chopped to death in this algo nonsense. Not to mention, we've got all this headline risk coming out, right? I was flipping back and forth. We had a ceasefire. We didn't have a ceasefire. We had a ceasefire. There were missiles. They weren't really missiles. I mean, back and forth, a lot of it. The market's doing a good job of ignoring most of that noise, most of it. But you can definitely see intraday these moves and how they're being effective. So I think in a market like this, if you wait for your price to get hit, be patient. It's going to pay off for you in the long run. All right, folks, if you're watching this on Zacks.com, be sure to subscribe or follow the author, rather. That way you can get the next one that's going to come out tomorrow if you're on YouTube. Subscribe to the YouTube channel. And for everybody here at Zacks, I'm Dave Bartosiak, and I will see you tomorrow.